Welcome to the At the Coalface podcast with your host, Jason Greenwood. This podcast is all about what it's really like in the trenches of digital and e-commerce. Hello, everybody, and welcome to another episode of the podcast. It's my pleasure to welcome Geron to the podcast, and he is the co-founder and CEO of Balance Payments. And welcome, Bar.
Pleasure to be here. How's it going, Jason?
It's very, very good. Now, I know you split time, Bar, between Tel Aviv and Israel, and also I think you spend a fair bit of time in New York as well. So you're in Israel at the moment, or are you in New York at the moment?
I'm in Tel Aviv, the city of everything that is beautiful.
Fantastic, mate. Well, look, I'm sure that obviously with COVID and everything else, there's a fair bit of going on in our space, and I'm sure it's no different for you guys. Now, interestingly, when I first found out about you, it was because you guys were kind of all over the press. You just raised $25 million for your B2B payments platform called Balance. And it really piqued my interest because B2B payments is something that I'm very familiar with just from the perspective of consulting with B2B businesses around implementing different payment technologies. And because I consult to so many B2B businesses, this really caught my attention because I don't really see anyone else out there in the market that I'm aware of, at least, focusing on all the different permutations of payment types and styles and tech specifically targeted at B2B. So can you tell us kind of how you came to be in this space and how you decided, hey, B2B payments is a place that needs some radical innovation and we're the guys to do it?
I think, when you talk about B2B payments, I'm thinking out loud, but it's funny because I think B2B payments is a term we invented in tech, right? It feels like B2B payments is, it's an invoice. It's a piece of paper. It's a wire. Digital payments are very much based on credit cards and were always just based on credit cards. So the concept of B2B payments is a really interesting one because it's not trivial to what exactly do you mean. And I'm not referring to you, I'm referring to the industry as a whole. Just a thought, but let's talk a bit about the context of me and Balance. So I started my fintech career at PayPal. PayPal Israel was based on a company that they acquired called Fraud Sciences. With time became the golden standard for fraud prevention. Companies like Riskified and Forta was created from the alumni of PayPal Israel. I was on the intersection as well between risk and strategy and product. Met my co-founder Yoni in PayPal, and then Yoni continued his path at PayPal as a product manager, while I wanted to learn how to build things. So I started to go down the stack and went to fintech companies. One of them is Behalf, which was the first time I got introduced to the concept of B2B e-commerce, which I found fascinating. I guess like most of your listeners are quite familiar with the concept in general, but B2B e-commerce for me is the biggest revolution that we're going to see in the world. And I will explain why. We just finished like the cycle. So did Behalf, which was a company trying to do like a firm for B2B, and then like instant financing. Then I created my first company in healthcare, which leveraged risk algorithms to predict bottlenecks to see a physician. So who will become a no-show and what should be the optimal appointment lengths are some of the stuff we did. Then me and Yoni, after this venture that we did together, decided to create a B2B payment experience that doesn't suck. And this is why I'm using the word experience a lot, because the idea of B2B payments is not a trivial one, as I said at the beginning. So we wanted to make trade something that is just seamless in B2B. So we just, we had the experience. I saw B2B e-commerce up close. We saw the payment world up close from PayPal as well. So we started at Y Combinator. We had a few angels from the beginning that knows us from our previous venture. Then we went to YC, the accelerator from Asaf, which was just a great experience. We got very intimate to B2B marketplaces, and we decided to build something that is similar to the Stripe approach for payments from back then, which was, let's do two things. One, create an API-first approach for companies to make B2B payments something that is scalable. All those companies that are trying to acquire new buyers online and really make B2B e-commerce something that feels like B2C, we wanted to be their partner to solve all the friction points, to make it something that once you put on your website, it's easy as a credit card with the flexibility you need from the offline space. What is that flexibility? Mainly two things. Obviously, there's different features that the system have, but two main things in a transaction that's worth talking about. One is the payment method, which most businesses are not looking to pay with a credit card, they're looking to pay with the non-trivial payment method. This is why it's so interesting talking about B2B payments. They want to pay with checks because this is how they pay all their vendors or wires. They need to get an invoice. They need to get terms, the ability to pay after the delivery was made, for example, paying 30 days or 60 days. So all the things I mentioned right now are friction point that makes B2B transactions something that is not scalable inherently. So what Balance is doing is very simple in that sense. It's an API first approach, but we created a product, which we called back then the first B2B checkout experience. It's funny because B2B checkout, just to talk about how new the B2B e-commerce industry is in general, when you search B2B checkout, the only result, like you see, I think it's the first result. I don't know if it's true right now, but it was when we created a term like B2B checkout was the first term in like Google because it wasn't a thing. You know, when you do Google Trends and you're trying to figure out if B2B checkout even exists, you don't see anything. Like, you know, it's a flat line. It's really, really interesting how things evolved. And I think the real innovators in the space are the new B2B marketplaces. Did you got familiar with B2B marketplace in general in your podcast?
Yeah, we haven't gone into it in depth. I haven't had anybody from B2B Marketplace on the podcast, but when we look at across the ditch in Australia in particular, late last year, a new B2B Marketplace launched called Trade Square. And I'm familiar with a few of the other, particularly in Europe and Middle East. I'm familiar with a couple of the other B2B marketplaces. And of course, we're very familiar with Alibaba and the Chinese B2B marketplaces. So yes, it's not a foreign concept down here. There is no B2B specific marketplace in New Zealand, but certainly we are very aware of the growth in marketplaces in general, and specifically the opportunity around B2B marketplaces globally, just because, as with B2B e-commerce in general, it is far less mature than B2C e-commerce to begin with.
Yeah, I think, you know, what gets me excited about B2B marketplaces is the fact that the result of a successful revolution of an industry that is leveraging the capabilities a marketplace have, which is creating new demand for vendors and creating optimization in pricing and cost for the buyer, can change the economy as we know it, if you think about it in scale, right? So give you one example, we have a B2B marketplace in steel. That marketplace is connecting between buyers of steel and vendors, suppliers of steel. Before this marketplace was exist, its users had one contract with one supplier. The overhead of moving from one contract to the other was a big one. And the result is that the entire trade around steel is relationship based. Now, you know it better than me how significant the Amazons of the world are made for the cost of just purchasing things. So in B2C, it's great that you can purchase an iPad 30% less. But in B2B, that's the economy. That's in the basics of everything. And if you can optimize the cost and just make a more robust economy around those archaic verticals, everything can be different. Like the cost of living for everyone can change. This is why I'm so excited about B2B marketplaces, specifically B2B e-commerce in general. And we do have a lot of luck, I would say, working with the different B2B marketplaces. So we have a really wide variety of them, like from steel to construction to medical supply to even antennas to wood. I'm just surprised every day that goes by of the new B2B marketplaces we discovered, the innovators that are trying to take like those weird verticals, the archaic verticals, and make them something more technology oriented. It's also from across the different like sizes of companies. So we see it from YC companies, and this is where we got started. until like public companies doing like innovation in how they do with companies like Miracle, which I'm sure you know, that enables marketplace infra inside any company. So we see it from like publicly traded companies that are doing those marketplace at the back to facilitate more trade, or small startups doing it to innovate in a specific space. So I think it's everywhere. It's really interesting. And we are very fortunate to have the opportunity to support all of them. So yeah, that's like the high level context, I think.
Love it. Now, if we just, for the benefit of the audience, and let's unpick this a little bit from its most basic components and compare it. Use the B2C space as a form of comparison and reference, so that we can start to understand how you fit into the payment environment for B2B commerce versus, say, the traditional B2C environment. And when we look at B2B versus B2C from a payments perspective, B2C is extremely mature. So we've got many different payment gateways around the world. We've got local payment gateways. We've got global payment gateways. We've got digital wallets like PayPal. We've got buy now, pay later payment platforms and fintech platforms such as Afterpay and Klarna and Zip and a million others. And now we have the announcement just a few days ago that MasterCard is going to introduce at the scheme level their own buy now, pay later service attached to MasterCard. And one can expect that that's going to come very soon to Visa and the other majors as well. So the payment space in B2C is extremely mature. It's become dramatically more simple for most merchants to implement various different payment methods, from credit card to direct credit to buy now, pay later to digital wallets, and even crypto is now easier than ever before. And most of those integrations are pre-built by either the payment platforms themselves or in combination between the payments platforms and the, say, e-commerce platforms or the ERPs themselves. And so that's why we've effectively got plug and play payments platforms for B2C e-commerce, whether it's Shopify, BigCommerce, Magento, doesn't really matter what platform, or even ERPs, D365, NetSuite, etc. We've got these very mature payment methodologies and plugins and tech that make it super, super simple to get up and running with a multitude of payment options and payment methods in the B2C space. Now, when we move over to B2B, it's an entirely different story. And I think this speaks very heavily to what you said, which is it feels like we're stuck in the 1960s or something like that when it comes to B2B. Now, I don't know exactly what it's like in Israel, and I don't know exactly what it's like perhaps in North America, even though I'm originally from the States myself. I've been in New Zealand for 25 years. So, I very much have an ANZ, APAC lens on payments tech. But I do follow what's happening in payments around the world. And I know that, at least speaking for ANZ, 95%, let's just go back to B2C for one final point. In almost all instances, say 95% of instances in B2C, all orders are on a prepaid basis, right? So they're paying via credit card, they're paying via digital wallet in real time, they're paying via buy now, pay later, which is immediately paid by the gateway, and then they take their payments in a payments fashion from the end customer. So that's another key difference, is that B2C is 95+% of the time prepaid by the customer. Their orders are prepaid at the point of purchase and point of checkout. Whereas B2B, not only do we have this archaic payments concept within B2B and archaic payment methods, and these payment methods just also happen to be exceptionally expensive, but we also have a scenario where 95+% of those are probably a post-paid environment. Now, we're talking outside of marketplaces here, but if we're talking direct B2B websites or EDI or anything like that around B2B, it's post payments, and that's on account or on credit of some variety. And what that means is that they might get net 30, 60, 90 days to pay, and they would, a B2B customer of a B2B business would typically pay based on a statement or a block of invoices as opposed to paying one order at a time in advance like the B2C world. Now, when we go outside the credit or trade terms, we then have these other sort of more esoteric payment methods to pay those statements or invoices. We've got ACH, which is just not that popular down in ANZ, but it's massive in North America and in other parts of the world, which is automated clearinghouse. And I'll get you to speak about that a little bit. We've got wire transfer. We've got archaic checks, which is, again, not very popular down in ANZ at all, but it is still a very popular payment method in many other parts of the world, and particularly LATAM. And then, of course, we've got business credit cards as well. So what we've got is we've got this massive disconnect between the ease and the simplicity of B2C payments and virtually no tech innovation that's come to the B2B payment space at all. And so therefore, or at least over the last, say, decade, and as a result of that, people place orders. It just goes through as an order. Is effectively a PO. Even if it's an order, it's just a PO effectively, and it's on account, and then that account will get paid via wire transfer or direct banking if it's a domestic payment. So we've got this huge disconnect between B2C and B2B in terms of maturity of the payments infrastructure. And it sounds to me very much, both by what you're saying, what I've seen on your website, and what I saw about the articles when you got your funding, is that you are looking to disrupt the level of archaicness, if that's even a word, of the B2B payment space by bringing some of the same concepts of innovation and maturity and native integrations to B2B that already have existed for a long time in the B2C space. Am I reasonably on track with my thinking?
Exactly. I think the word, like the terms we're using, is making B2B as seamless as a credit card payment. This is how we thought about it from day one. I think the success of credit cards was that it's scalable to infinity, and it's very, very standardized, right? It's the same always. I think in general, when I think about technology, it's like an interesting trend of things becoming more and more simple and then complex again. And I think this is B2C payments, right? It started from like, oh, I can't even accept payments online. What is this? And then, oh, I have PayPal, which is okay. And then I have Stripe, which is amazing. And now I got like to the peak of how easy it is to process B2C payments. But then I had so many alternatives and so many options. If I'm a vendor today, it's really hard to build a payment experience, right? Like in B2C, it's so challenging. You have so many options. If you look at the average B2C experience in checkout, you see like 10 options, right? Like Apple Pay, Google Pay, PayPal, buy now, pay later with Affirm, and so forth, or Afterpay. So very complex. When you think about the journey of B2B, we're step zero. First of all, enable a self-serve payment experience online for B2B. That's not even a thing today. The only thing you can do today is to pay with a credit card, which is okay for like 8% of cases, or requesting an invoice and terms and going through the process offline and getting it through the ERP. Now, we're in step one, which is if you don't know the buyer, can you facilitate trust with him online to give him the ability to pay how he's used to pay, which is offline payments with terms and so forth. So the ability is, in balance, we look at the world from the glasses of, don't educate, enable. So this is how we approach the market. We're not trying to do like a very, very aggressive move with the product to make everyone move like, that the credit card companies has all those products that are trying to push to customers to use credit cards or to business customers, as their main funding option, which is that just doesn't work. They're trying to educate the market, but the market is going in a specific direction. The direction is positive. You just need to have the patience. And while you're going through that process, give them the flexibility they need as businesses, but make it super seamless for vendors. Just accept payments to start scaling their business. If I'm a B2B marketplace, venture back, I'm trying to grow, I can make B2B payments offline. If I'm a B2B e-commerce business that are trying to automate my experience, I can invest $1 or $1.5 million in building the experience and making orders something that is scalable, but getting stuck on the payment side, right? I can have those bottlenecks in my flow. So we are very, very focused on that. So we do it in two ways. One is the checkout capabilities, which is just a white labeled, very, very easy to integrate, very cheap to integrate. right? You take like a simple snippet like Stripe, you put it on your website, and you can process, get self-serve invoices, checks, wires, having an instant risk mechanism to approve customers for terms while you're getting paid instantly and easily like it's a card payment all the time. This is step one. The others, which we support, obviously we do the payouts as well because it's a marketplace. We give you APIs to build the payment flows you need to support your specific way of doing business. Flexibility is everything in B2B. It's not, the wonderful thing about B2C is that customers are usually guests. They have the same experience across all different e-commerce. It's very, very easy. There's no sophistication. They don't have any needs because it's just there is no relationship. So there's no expectations. There's a product, you can buy it, you can use PayPal, you can do disputes. That's it. In B2B, you have an account, you have expectations to get paid, to pay in milestone X. You expect a certain level of quality. It's much more sensitive. It's your supply. So you need to have that flexibility in the product as well. So you can't attack the product from the angle of B2C because you will see that it's not scalable. But you need to have something generic enough for make a company not a service company. The end balance is a product. So it's a delicate balance, but I think we're doing a decent job at it.
I can totally understand and see how, with the support of a marketplace, by integrating balance into the marketplace as a core payment method that's marketplace wide, then your service is ubiquitous across all merchants that sell on that marketplace. So that makes sense to me. Help me understand how your technology works. For example, let's say I run VTEX, or I run Salesforce Commerce Cloud, or I run Shopify, or I run BigCommerce. I run a major SaaS platform for my B2B e-commerce. How can I take advantage of balance in those lockdown checkout environments?
Yeah, so that's a great point. So one of the things that Balance is really focused on is to working with the partners to be seamlessly embedded inside the ecosystems. So we're already working with Magento. Salesforce is coming up really soon. We're about to finish the process. We have BigCommerce on the way. We are part of the B2B edition, which was very exciting that we got an announcement for BigCommerce. Fabric Inc. You heard about Fabric Inc., by the way?
Yeah, absolutely. Headless platform.
Yeah, doing an amazing job. We're going to be their go-to partner for B2B, and we're working on it right now, which is very exciting. And yeah, WooCommerce is on the way. Like the goal of Balance is to be everywhere that e-commerce is. Like our focus on e-commerce is very significant. So because we have that level of focus, it's all we do. So we have the resources to invest in being embedded seamlessly within the platforms.
I guess the platform also has to facilitate that. So obviously, in a Shopify environment, it's a little bit more difficult, although their payments API, the newly released payments API should make that hopefully a hell of a lot easier for you guys. And of course, BigCommerce now has its own payments API and SDK. And then of course, with B2B edition, you would be less integrated with BigCommerce and more integrated with Bundle B2B. So if you've got an integration with Bundle B2B, then you're ready to rock in the invoice portal, and it can be plug and play pretty quickly. So I'm guessing that you're looking at other B2B focused e-commerce platforms like Peppery, like New Order, like
Commerce that we are now integrated with.
There's a lot of B2B focused e-commerce platforms out there, and I guess it must be a bit of a two-pronged approach for you, whereby you're working hard to get your plug and play integrations up and running with the B2B e-commerce platforms, but also behind the scenes doing the negotiation and the work with the B2B marketplaces so that you can be effectively the de facto. You're almost going to be like the admin of B2B e-commerce payments, right? You're plug and play with whatever marketplace happens to take you on.
Exactly. The idea is to make it a no-brainer to leverage Balance. We see ourselves today, and I'm saying it with it's hard to talk about yourself, but we do perceive ourselves and our investors as early leaders in the space. And now with the new funding, we have the abilities and resources to just move fast and be the player for B2B e-commerce payments, which is a space that I think a lot of payment companies are, I would not say afraid of, but the lack of knowledge about how the industry works limits them from making those bets. and we feel it as well. Like it's not like, we got it all figured out and it's very obvious where the opportunities are and so forth. I think it's a space of the innovators. It's not a space for the corporations. This is why I think the next disruption will come. Maybe it's obvious, but will come from small companies that can move fast and can really learn versus the big tech companies or the payment companies that will try to swoop in.
Definitely. And maybe you can help me understand a little bit more about the mechanics of how you guys typically work with a B2B marketplace. Now, as I understand it, and as I've seen and experienced so far, the vast majority of B2B marketplaces are stripped down in terms of the experience that they provide versus your typical B2B e-commerce website, from the standpoint of, obviously those B2B customers are in many cases, they're unknown at that point. They aren't on account with the vendor yet. They don't have trade terms. They don't have price lists. They don't have credit terms and pricing tiers, and they can't request quotes and all those things that you would expect to get through a B2B e-commerce website where I have an established relationship with the vendor. The B2B marketplaces have taken a very different tack to this, which is to say, when they start working with vendors to sell on their marketplace, they say, hey, look, send us pricing tiers for this SKU or this, this parent product, these variants. Price your variant or price your individual products based on, 100 units, 200 units, 300 units, 400 units plus, and hey, we'll just put tiered pricing on there. And then we remove all the complexity of having customer specific pricing and price lists and regional pricing and all those things. We take away we strip back the complexity in a marketplace environment by simply having tiered pricing based on volume discounts, based on bulk wholesale purchases. Now, what that does in a B2B marketplace environment is it makes it more like a B2C marketplace experience, because you're just getting a volume discount. You don't have to establish a relationship with the vendor to do business with them, right? So we're stripping all of that complexity out by establishing a B2B marketplace. But on the flip side of that, we now have an environment where businesses still want to pay in business-like ways. They don't want to just pay with a company credit card, although sometimes they will, but in many cases they won't. They'll still want their traditional ACH or wire transfer, or maybe even look to establish credit terms with that supplier and then pay at a later date via a direct payment outside of the marketplace itself. So are you guys effectively trying to bring that level of maturity and flexibility in payments to the marketplace that they couldn't otherwise get themselves?
Jason, I think it's a beautiful framing. And I think you look at the industry the right way. This is the evolution we see in the market as well. There's three types of innovators in this space. One is the companies that are creating the order experience. It can be a marketplace, it can be a sole vendor doing B2B e-commerce. As you said, what they're trying to do is to create scalability. There's the old approach of saying, okay, everything's relationship, ask for a quote and so forth, be on account. And there's the new approach of, okay, let's imagine, and it requires some imagination because it's not a thing today, that if we will do the enablement around scalability, we will be able to generate new revenues and more customers coming in as a result of it. In B2C, again, we always come back to B2C because it's so easy to understand. But in B2C, there's the element of knowing what is possible. Like in B2C, when you're new to e-commerce and you want to build an experience, you know what is achievable. So you are willing to put the effort, which is, again, not trivial at all, even in B2C, to raise above the noise. In B2B, the challenge is that it's a culture challenge. I don't know if to call it a culture or just simply imagination. In B2B, it's hard to imagine the world that you will be able to acquire new buyers online. Not only operational efficiency, which is also very important, it's very expensive, time to cash is very slow and so forth, but really acquiring new businesses to just grow, leveraging the power of the internet. So that's a jump in perception that is just not trivial to do. The first step is the platforms and the industry needs to hold hands together and And the agencies, by the way, especially the agencies are the most powerful. The agency trailers.
Yeah, absolutely. Yeah.
Yeah, so I just had a discussion with Asia about it. It's the responsibility, and it's a big responsibility because the result can change the world, right? I'm a big believer in that. It's a responsibility of all of us to persuade, to make the perceptions of the old industry, to let them know that there is an alternative world that can run. And we just need to get there. You need to make the investments. And yeah, we are part of the enablers, but it's a bigger thing than just balance. It's our ability to move forward as an economy.
Yeah, it strikes me that one of the reasons why B2B is a bit more archaic in its mindset and thinking is because there's very much this concept of fiefdom, of regions, of authorized distributorships, of no cross-border commerce because in B2B, because I'm not authorized as a distributor of this product. I'm not authorized to sell it into this region, but I'm authorized to sell it into this region. So I can go into a marketplace on this region, but I can't go into a marketplace in this region. And I think that there has been
True.
these artificial barriers to entry erected within B2B e-commerce, full stop, that is all about, regional control and monopolies and these old school, old boy networks. And basically a lot of the distributors, particularly wholesale distributors that have long established relationships with manufacturers, they are loath to allow the manufacturer to go to direct into their markets, whether it's through a marketplace or through an owned e-commerce website. They are loath to go into a marketplace model themselves because then they feel like they're losing an advantage to maximize margin by negotiating trade terms with each individual B2B customer. And so they're like, wow, if we go into a marketplace model, we have to greatly simplify our pricing. And then there's easy price discovery, easy price transparency. And in the old school way, there is no pricing transparency. There is no leverage that the B2B customer has through pricing discovery because there's only one route to buy the product through.
Exactly.
So for me, I think that B2B, the reason why that it is largely archaic and it extends all the way down into the payments layer is because those barriers to entry are designed into the B2B environment on purpose to make the barriers to entry so high that the people that are able to jump through the hoops and have the capital to do so and the negotiating power to do so and the relationships to do so, when they establish the power of a local distributorship, for example, they are loath to give up any power in relation to that whatsoever, to the point where if they see, quote unquote, if we think of the whole entire rise of cross-border commerce when it comes to basically buying off of an international distributor and then distributing locally, when we look at that entire model, it has been born out of the fact that I, as a retailer, say, for example, a B2B customer of a B2B wholesaler, but let's say I'm a retailer and I'm buying B2B off of a wholesaler, I can oftentimes buy off of an international distributor far cheaper than I can a local distributor, right?
Oh yeah.
And
yeah.
but it's that local distributor monopoly that has created what we call down here, I don't know if you have the same terminology, parallel importation, parallel imported products. And so that is, and I know because my former pure play e-commerce business, the reason we were successful is because we were parallel importing memory cards from every country in the world, some cases off of retailers in other countries, and able to sell them at retail domestically at lower than the local wholesale price. So from my perspective, B2B is just an absolute old boys network globally in most instances. And until those monopolies are broken, we're going to continue to have these challenges in mindset more than anything else in the B2B space.
First of all, fascinating stuff. Bottom line, I couldn't agree more. It's part of the culture shift that needs to change. And I think it's, what's cool about it is that I think historically, this is how economy evolves, from having like few players with all the power and the control of having like the limitation of how you can purchase and having all those middle layers and so forth, to a decentralized system with everyone. It's like a many to many ratio, which is the jump that B2B is looking to do. The encouraging thing about it is that it's happening with VC backing. Startups and VCs in general can be perceived as like a bubble a lot of the time, which is true. It's not that it's not true, but it's a bubble with a lot of power. With the power of venture backed, with just VCs and very smart people tackling those problems, there will be no, it will just break how things work because it will be 10x better. And I just see it everywhere today. I see hungry entrepreneurs that are innovating in specific verticals and they don't give a S about how things happen at the past. And they are hungry and they have the capital to pursue the opportunity. So I'm very encouraged by the progression we see of technology in B2B trade in general.
I'll tell you what else I'm massively encouraged by, Bar, and that is the fact that the lack of maturity in B2B right now from an e-commerce perspective presents vastly more opportunity for people like you and like me who operate and swim in and are very comfortable in these ultra complex commerce environments. It presents such incredible opportunity for us versus even B2C because of the relative maturity and competitiveness in the B2C space. And, I've been working in e-commerce for over 20 years. And one of the reasons when I established my consulting business that I wanted to focus on those much more complex commerce environments versus the vanilla B2C space is because they're not only more challenging and more interesting, but it's all blue ocean because there's almost I'm not aware of another, I could be wrong, but I've been operating in ANZ for over 20 years and I'm not aware of a single other independent consultant that specializes in really complex B2B commerce environments. They may be out there, but I've never heard of them. And it's just such an incredible blue ocean space. And for me, what I'm seeing and what I'm witnessing down here, and I'd love to hear your take on it, is that many traditional B2B verticals that had no e-commerce because they were being run by field sales reps and physical B2B storefront, physical stores, and also account managers, BDMs, BDRs, etc. That is slowly starting to change. And in fact, over the last 18 months, change much more rapidly because of COVID. And those field sales reps physically not being able to get to their customers on site, having to do everything via Zoom and having to do all this manual labor to process these orders. And their customers are saying, why can't I buy through you just like I buy my t-shirts online? Why can't I get my trade pricing and all my different payment methods, all that? Why can't I get all that in a seamless, easy to consume e-commerce way, just like I can anything I can buy off of Amazon or off my local e-commerce shop? And I think that coupled with just the global acceptance of doing deals remotely, even for B2B now because of COVID, and not needing to literally, meet to do a deal over a lunch and a bottle of wine or at night, maybe a bottle of tequila. We don't need to do that now because the expectation is we can't. And so therefore we need to enable a faster, easier, digital tech-enabled way of doing B2B business today.
Yeah, I think it's a great point.
Now, as we sort of come down to near the end of our time together, what I'd love to know, there's two key questions I have for you. One is, what countries or regions do you guys operate in as of today? And because obviously you guys have to have, these local banking connections and these, there's a lot of plumbing under the bonnet that has to happen for you guys to automate this stuff internationally. And then there's, of course, local tax laws and all sorts of compliance obligations and security. And oh my God, I just can't imagine how complex some of the stuff you do might be, but I'm sure it's a lot. And I'm sure it's, there's not only the legal component, the financial component, the dev component, there's a lot. And there's the partnership component, because what you guys want to do in terms of embedding yourself into all these different platforms requires some level of assistance and support from the platforms themselves, whether that be Marketplace or Miracle or, whatever, Shopify, BigCommerce, whoever it might be. And so I guess, first of all, what areas and countries do you think you're strong in right now? And if we were to forecast out over the next 12 to 18 months, where do you guys see yourselves becoming strong in over the next 18 months or so?
For now, we are very strong in the US and Canada, and we will be rolling out Europe in the next Q. Not all the features will be available, but I think it's it's a step function of what exists today. So I'm really happy with the progress in product. But yeah, today, most of our customers are US and Canada. UK and rest of Europe is on the way.
And do you have any visions at all, even in the medium-term future to look at ANZ and our region and APAC?
You tell me. How do you see the opportunity there?
Look, it's an interesting one, man. I think that, the same opportunity, we have the same archaic, in some respects, mindset in the B2B space as anywhere else in the world, right? The same sort of fiefdoms and monopolies and all those things that exist everywhere else in the world exist down here too. And instead of having maybe 2 or 3 distributors of a specific brand in our region, we typically have one. And so there's even more, in most respects, there's more concentration of power in fewer hands in ANZ than there are, say, for example, in North America or Europe. And as a result,
for sure.
I think in some respects, the opportunity is even greater down here. Now, sure, we're smaller populations, 5 million here and, what I think it's 25 million or whatever it is. So, I think that obviously the total market is tiny in comparison to 350 or whatever it is in the States, and then Canada, and then, and then Europe obviously is massive. So obviously your opportunity is going to be bigger in those larger areas. But I guess from a financial system maturity perspective, I guess it's pretty mature down here. And so it feels like it would present a pretty good opportunity for the business.
Sounds very interesting. I have very little understanding of the ANZ ecosystem, but it sounds like a great topic to continue our discussion on, right?
Look forward to it, my friend. Well, listen, thank you again for sharing your thoughts, your insights, your tips, your vision for B2B, full stop, B2B commerce, B2B e-commerce, but more importantly, B2B payments, the challenges you're seeing in the market, and how you guys are looking to deal with those and become an essential component of the B2B commerce ecosystem. Super excited for you guys. I'm super excited. I'm really impressed with obviously the investments that you've raised and the money you've raised, and obviously getting through YC. And look, it sounds like you guys have done some amazing things in a pretty short span of time. And, you have a pretty big vision. This is what we know as a BHAG, right? Big, hairy, audacious goal. And you certainly have a vision that is, this is a career-making thing, right? It's big enough and hairy enough that this is not something you're going to solve overnight. It's something that you can really, truly sink your teeth into, and you have lots of partnerships to make and build, and lots of tech and plumbing to build. So you've got a lot on your plate, and I'm super excited for you guys. Super excited to watch you and see how you guys grow. And who knows, in another 12 months' time, maybe ANZ will come onto your radar, and we can have another deep chat about that.
First of all, thank you so much for the kind words. It was a pleasure getting to know you, but just speaking with a person that understands the ecosystem, it was a blast. So thank you so much for the time.
Absolutely. My pleasure, Bar. We'll speak again soon. Bye-bye. Thanks for listening to the At the Coalface podcast. If you want more At the Coalface, you can subscribe to our premium e-commerce and digital newsletter, At the Coalface Digest.